What's up, YouTube? It's Brendan from Market Makers. Guys, haven't had power the last 2 days really. Have a big solar panel project going on here at the ranch, but I'm powered back up and I'm making a video. Let's click through some charts because we got to see what's going on in these marketplaces. The DXY, the Dixie is in front of me. We knew this was going to dump. We trade Forex in a room too, guys. That's my background is in Forex. We trade Forex, stocks, and metals. And of course, the link to our room is in the video description if you want to come try out Market Makers. So the DXY dumped, guys, which is good for Bitcoin, okay? It's good for Bitcoin, and it's looking for support here at the 1618 and the GAN support of 94.6. So we'll see how long this stays. It may get a little rebound. Basically, inflation came out. The inflation report came out. It's still high, obviously. They don't include food. They don't include energy. They don't include things like rent. So it's 7.8% the government numbers, but the actual inflation is more like 15%. So this is bad for the dollar, if you're wondering. Because what does inflation mean? It means you're inflating the money supply. There's too many dollars. When you have too many dollars, they are worth less. That's the dollar lesson. So let's go into Bitcoin, guys, what you guys care about. But it does matter what happens with the dollar in relationship to Bitcoin. All the markets dumped today, okay, led by the NASDAQ. NASDAQ went down 2.5%. All the markets dumped. Looking at the weekly Wyckoff, doing what we're supposed to do, weekly candles, not a lot of action, as you guys can see. So it's just holding support. Guys, our weekly Navarro pattern, holding key support here as well. So everything's the same at the weekly level. No big deal there because, as you know, it's weekly. One candle takes 7 days to make. So let's look at our daily. I showed you guys this yesterday or 2 days ago when I made my last video, the cutout. I mean, this is amazing, the cutout. So what I'm still thinking here, guys, is even though we have this little decline here, if you notice here in the previous trend, we also declined. We went up 3 candles. We went up 3 candles and then down 2 candles. I mean, this is funny. So up, 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 down. Let's see if another one comes down. You know, we're going to talk about in the smaller time frames the key support, but obviously we're looking at this January 18th date, which may be the 17th, because again, TradingView says this candle is the 14th and today's the 13th. I think it might be calculating it based off the close the next day. I don't know what it's doing. But anyway, 17th or 18th, we're going to be impacting this actual trend or fib time here. So that should be a potential pivot point. Of course, guys, you know, as always, look at the 55,233. All this is coalescing together very beautifully. I don't think anybody else is doing the cutout. This is really advanced TA, copy paste TA. So hope you guys are enjoying that. But we do have this bearish pattern. If you missed the last video, guys, I know a lot of people that aren't familiar with Fibonacci patterns. This is our bullish pattern lifting price. This would be our bearish pattern. Price gets up here. If it finds resistance, we're likely would find resistance here from the 233 and the 55 anyways, and you're impacting a fib. This could be our rollover to a potential spring. And of course, as you guys know, we talk about all the time, you don't have to have a spring. You could just roll over a little bit and start pumping up, right? This doesn't have to track exactly as it did before. It's just amazing that it's tracking exactly as it did before. But guys, we need to focus on some other things too. We talked a lot about the upside the last couple of videos, which obviously for reasons why, because we're accumulating just like we did before. This almost looks like a cup and handle pattern, doesn't it? You got your cup and you're forming your handle right here in the daily time frame. But let's talk about some other things as well. You know, the fib time here, January 18th, you know, as always, we got to hold the key support levels, right? We got to hold the key support levels. We don't want this death cross to really knock our teeth out and really send us down. And let me show you on a different chart here. This will be better. So the upside potential that we talked about off the trend-based fib, many videos now, the upside potential, guys, we have to get past this 382. Let me circle these for you. So if price does roll over like we think it will, start making some candles up, right? It's going to come back down, you know, last point of support, come back up, maybe find some resistance up here. Maybe this will be our backup area. We don't know what the candles are going to look like. This is just projections. But if we do come up, these are the key areas of resistance. The 382 at 52K. And if you notice this is an important one. Let me zoom in a little bit, okay? This is an important one because this gets you above this whole garbage trading range that we've been in, right? Ever since our decline, that gets you above it if you can flip this 382 and use it as support. So that'll be a very critical one. Let me get rid of these drawings. And then let's look at the next level will be 59,325. And again, you always want to look at the confluence with what you're getting above. You get above 59, you're above all of this. If you're above all of that, that gives you an opportunity to come up. You have nothing else to contend with except this previous cluster of candles. So this will be really interesting to see how this plays out. But we're going to look at the downside projections if we lose critical support, okay? Because again, this is based off of the 618 here is 66.5. I mean, I guess I should finish my thought. 66.5 gets us back up here towards the peak. And at that point, I think it's pretty clear you have a high potential if you can get past the 618 of making all-time highs at that point, okay? If you can get up there and use it as support. And guys, as we talked about, I know not everybody watches every video. Just want to show you the projections, what I'm doing here so you can make sense. So this is the trend-based fib, okay? And I'm taking the trend-based fib from the beginning of the bull run back in March 2020. Beginning of the bull run, up to the previous all-time high, down to the market low. That gives you the impulse wave projection up, okay? The impulse wave projection. So this would be your correction, and we'd be projecting back up from there. But let's go ahead and look at some downside potential. That's what we want to see here. What could happen if we do go negative here? Let me turn this super trend off. All right. So let's take our trend-based fib. And let's go from the all-time high. I want to take the big impulse waves, okay? I'm going to go from the all-time high. Let me turn my magnet on for this, make it exact. All-time high to our dump low there, to our swing high here. This will give us our projections down. As you can see, look at that, the 382. Always check the accuracy of your fibs, okay? Just because you find key points doesn't mean it's going to lay out accurately on price. The 382. So what's our key levels of support? Well, according to the trend-based fib, which again encapsulates more information than just pulling a fib retracement, you're capturing a complete impulse wave and a complete retracement, okay? I use both, and oftentimes the key points will intersect or be very close, but for this, we're looking at an impulse wave potentially down. So our key levels of support here is a 41, basically 41.5, okay? That's your first key level of support. After that, 38.196. If we lose 38.196, that's the 0.5. Bitcoin's in danger at that point because that's down here, okay? That would be price getting knocked down, maybe from the death cross or whatever, or just too much selling pressure, or the NASDAQ keeps dumping and price comes down here. This is a really bad range to be in. You're going lower than your down thrust. You're going lower than your selling climax candle. And oftentimes in Wyckoff method, if you start getting lower than your selling climax, you're going on to make new lows. And on top of that, if you pull a fib retracement from here to here, this would be your 100% range, I believe. We can do that really quick. I guess I shouldn't just say that. But whenever you pass 100% on a fib retracement, there's a high tendency to have a impulse wave come from that. Yeah, it is. So yeah, that's your 100% right there. So you guys can see it. That's the one fib, okay? So that means this move up and then the move down, if you get past the one fib, is over 100%. Right? It becomes a much more high probability that you can have an impulse wave in that direction. So that's just something to look at as well. Go ahead and take that off. And so let's look at this. So if we lose 38.196, that's kind of the line in the sand. If you come down, you're going to come back up. There's always going to be relief rallies and stuff, but you would have a much higher probability. Because what is TA, guys? TA is about probability. It's not about certainty. If you lose your key level of support here, this down thrust basically was testing your key level at 39, right? This is BitGet. It was 39,610. It got, I think, the key support for the previous low, because this is a higher low still. The previous low was 39,596. So this got close to the previous low. If you start falling below your previous low, which was 39,596, which you would be at 38,196, maybe you could rebound from here. I think if you go below that, I mean, the next key level is a 618 at 35. I mean, much more likely that you're going to come up on some type of relief rally, make that classic dead cat bounce, and again, this box would become a redistribution box where we'd have a buying climax candle or potentially a selling climax candle from a drop. It just all depends how it plays out, but the steps would all repeat themselves, and basically Bitcoin at that juncture would be accumulating at a lower level, right? So that would look something like this. If we do, this death cross happens, we get an up candle, and just start doing something like this, right? We fall through, hit the 618, come up, fall back through. At some point, you're going to have your selling climax candle. You'll have a hard rejection wick back up, and then you'll just start making a range, right? You'll just start making a range like you were before, testing secondary test of your ceiling, maybe some down thrust or maybe some up thrust if it's a distribution box again. So it really just depends what the price action is going to be, but it's always valid to look at the downside and upside, okay? Now, that would be 34,914, so basically 35K. So we want to hold 39,596 and up, obviously, and that key 382 would be 41.5, and anything below 38,196, I mean, it's hold on to your hats, because we most likely would drop. If we lose 38,196, we'll be going to 35K, and again, that's just much lower range for Bitcoin, right? So one thing to see here, let's see if we have any patterns, bullish or bearish on the daily. Yeah, actually, I think we do. Let's look at this, guys. Let's find us a pattern. Let's go all-time high to that dump low, swing high, swing low. Oh, look at that. I can get us to, so this should validate at 886, just shy of the 618. This is a shark. This is a shark pattern. So this is a bearish pattern, but it requires price. Okay, this is Fibonacci pattern trading. It requires price to go X to A to B to C up to D, and then it would find resistance, which, where would that be? I'm thinking the 618, that yellow line, and then come back down, okay? So it doesn't have to come all the way back down. It can come back down and accumulate and then move back up again. But this pattern's here. So this is an interesting pattern too. If this pattern plays out, I mean, you can have price. These are daily candles. So keep in mind, these daily candles have wide ranges. So you're going to have ups and downs and everything else. This is really interesting to see if this develops out. If we lose the ratios here, if the price comes down too low, we'll lose these ratios. But this may be where Bitcoin ends up going to before we get a significant level of retracement, which would be really, I mean, it's a nice pattern. This would be pretty high up. This would be, what, 65,969, so almost 66K. Almost 66K before Fibonacci is telling you it's going to find a lot of resistance. And this is a really clean pattern. By clean, I mean it's starting at the beginning of a powerful impulse wave, your all-time high, down to your dump candle, to your swing high, to your swing low. So this would be really interesting. Let's look at this other pattern really quick. So where's this at? This is at 46K. If price can come up there before it rolls over, it may just roll over before that, find support and start coming up. Really interesting. So we're going to watch this January 18th, guys, because with this shark pattern here that's presenting itself, if Bitcoin tracks to this, we got some nice trades. We'll have some nice opportunities on alts. Lots of fun things, guys. So definitely come check out our room. We'll be setting up trades and everything else. Trading every day, guys. If you guys are looking for a new exchange, check out BitGet. They're awesome. Super liquid exchange. Their link is in the video description. You get all the goodies, the bonuses. Constantly doing tournaments and fun things, promotions there. No VPN, no KYC. Great exchange to trade on. All right, guys. Hope you enjoyed this TA. Another video coming tomorrow. Take care, everybody.